Topic of discussion today is around variable costs incurred by various institutions in a very significant sort of in manner. These costs are variable in nature as they are related to trade expenses. It's based on trading activity performed within by different firms. I think the background to that is basically it's large in scale. Typically, these variable fees related to referenced as brokerage, clearing, and exchange fees. They they represent the second largest operating expense for financial services firms. I think the complexity and the magnitude of these expenses, with multiple fee agreements, fragmented accounting and control processes, are very intensive and manual in processing. And I believe that it limits organizations to enact with effective cost management kind of strategies based on their spend base. When we talk about large in scale, but it's also high in cost, banks typically exceed $1 billion per annum for tier one banks. It exceeds over $1 billion. When you look at tier two, tier three, it could be anywhere between 100 to $400 million in spend every year. So our view is basically maintaining client profitability requires these firms to really and implement innovative solutions to rationalize their business operations in order to optimize their spend. That is an enablement to reduce fixed and variable costs, improve transparency and operational efficiency. So one of the key requirements around that is around technology requirements. These spend base, since they are across asset classes, across fee categories, it requires a very highly scalable and flexible technology to process these hundreds of millions of dollars in spend. So what is the goal behind that? Ultimately, we believe that it is necessary for firms to improve their understanding of their transactional cost, develop capabilities to increase operational efficiencies, automate their accounting controls, and really enhance their reporting process. Now, SmartStream, we provide a end-to-end solution to strategically manage, let's say, what we call as the market-facing fees, capable of substantiating their expenses accurately across high volumes of transactional and information, and allocation of these fees and expenses to the right kind of cost centers and departments or divisions. Our solution is primarily focused in providing transparency in the fees and commission expenses and their revenue related to the execution business. Now, this needs a significant expertise and knowledge of the financial products to really understand the structure of the markets and the trading mechanics that kind of drive these costs. Now, coming to kind of the next topic here, I would say why we focus on BC&E. As you can see, bank spends hundreds of millions of dollars annually in these fees, including brokerage, clearing, exchange, settlement and custody, connectivity, regulatory fees. And I would even go to the extent of saying that this is like the second or third largest spend in the non-comp expense categories across tier one and tier two banks. When we have done analysis across several organizations looking at their financial statements, we believe that their expense range anywhere between like any global financial services firm, their spend ranges between $400 to $1 billion. In some cases, it exceeds over $2 billion for tier one banks. And if we look at the overall breakdown of these firms based on their global activity, a majority of the portion kind of is driven by brokerage, followed by exchange fees at 24%, but so on and so forth across clearing and settlement, regulatory and taxes. This becomes a major kind of portion of their spend base. So addressing this with deeper analysis is extremely important in that life cycle. I think it is important to understand that today the key challenges that the banks or the institutions face within this space. I think one of the key challenges is the lack of transparency. I think there is inconsistencies in billing. There's lack of clarity on the vendor spend. There's lack of clarity in the total wallet share that is being taken up by vendors or group companies where have different entities across regions or countries. But if you look at a group level, uh, you're not able to really look at what the total wallet share is. And I think that is also maybe lack of transparency also drives the fact that they're not able to pass some of these costs back to their clients. We believe that some of this remediation is based on really performing that cost analysis at a very detailed level to be able to kind of independently arrive at a calculation or a accrual that is and creating a pro forma of what the spend is going to look like at the month end is extremely important. I think automating billing and invoicing and the control processes around that will prevent revenue leakage. So there is a constant battle of where you have revenue leakage, you have costs kind of costs out of controls, and you can bring those controls within using kind of that's sort of the remediation for transparency. What transparency also drives is basically a opportunity to now optimize that cost. We also see in many firms there's lack of accountability. When we talk about lack of accountability, the total cost of income is not fully understood. There are operational efficiencies that are lost because of gaps in your controls in accounting or creating higher risk profile within these expense categories. Again, having a review of all your manual and automated processes, reviewing a vendor-based cost analysis, analyzing the infrastructure cost, you can really look at the overall total cost of ownership and drive that efficiency. One of the key pieces of this pillars of this whole challenge, the key challenges of is around the MIS, the level of reporting that is kind of produced by various firms. There are many times they are patchworks, they are homegrown, or they're using various vendor applications to do that. The data is fragmented within organizations, and that prevents you from really driving that cost analysis. And of course, products have evolved with the complexity, and that results in lack of having that reporting around that. So establishing and digitizing all of your agreements, digitizing all of your invoices is then that enables a centralization of data repository and historical expense of the transactions really will give you the view of all the different dimensions around that cost base. Be able to understand the core drivers of that spend and really drive the effective rates, and by doing volume analysis, really drive the effective rates down to bring that efficiency. I believe there's also a significant amount of regulatory cost increases. There's increased margin requirements, mandatory clearing. There's continues to be increased requirement for capital and controls. So timely payments and reducing the balances in time really helps to address those regulatory issues or those capital requirements. You have to minimize the provision numbers, manage the nostro breaks, and minimize breaks under 30 days so that you do not have a increased capital requirement. Moving on, I think it is also important to understand that CFOs and COOs and business managers and desk heads are really trying to understand the cost basis in the proper, which is properly priced for their business. They're able to measure their profitability of their business lines by their clients, really enable them to explain differences between what's forecast versus what's actual business performance and assess the return on their investment. I think that is key to this whole process. Our integrated. So what is our background within this? Where is SmartStream in this space? SmartStream entered this business in 2012. We acquired Excalibur as one of the platforms for expense management and the operations from Credit Suisse in 2014. Right now, FEMS is a SmartStream flagship product, which is available on the platform both on the cloud as well as on-premise installations. More and more customers we have seen in the recent past few years has been more cloud friendly and be looking at opportunities to deploy these applications on the cloud. I believe that what happens is it creates a very limited footprint for banks internally to and support that revenue and support that cost of IT infrastructure and support. So again, our platform offers a very modular design, which enables the subscription of functions that you really need as you need and on the need basis for you. SmartStream optionally provides IT support and a complete business process as a service for you in this space. May our management team or our core team within technology and operations come with an average experience of 10 plus years. We are a global team which operates across different countries from India, Singapore, New York, and Jacksonville in Florida. That gives us a coverage across like a follow the sun model and be able to support customers globally. May our customers include banks like Credit Suisse or Deutsche Bank, Societe Generale, BNPP, and Jefferies, just to name a few. So let's talk about our solution. Our solution has a strategic offering. At the end of the day, we improve transparency and efficiency for our customers. Our integrated business reporting is really providing our stakeholders with the key insights and measurements they need to drive more informed business decisions. And that is all driven by increased automation. So our platform and services provide enablement to our customers for various different services where they're able to holistically price their activity, manage their commission shares, manage their end-to-end billing process, manage their complete payable process, avoid expense leakage, avoid revenue leakage, and enable reporting of transactional tax and regulatory fees. It enhances controls around the overall process of managing several fee categories within a single platform. It improves controls around your accruals, your allocations back to the businesses, and a complete payment process. So as you look at, we are able to provide, as what you're seeing by doing this is, we are able to provide firms with very detailed trade level metrics, really enabling them for efficient management of their expense and their revenues. We are able to influence behavior by really driving the ROI, as firms are required to closely monitor the internal and external trade cost. So what we are offering is really providing an improved understanding and measurement and the optimization of how transaction fees are incurred and the opportunity really to drive efficiency and realize considerable cost savings. And this all comes from different kind of, values that we kind of instilled in this whole program and the process. Means our billing solution extend beyond just managing commissions and revenues coming out of commissions. We are enabled to provide customers with cost plus billing. And within cost plus, they have various models where they can go do cost plus markup. They could do all-in commissions. They could do overrides with commissions. This overall encompasses to understand the expense at a very detailed level to be able to kind of move that back into what the revenue or pass back to the customers. So the metric, again, I think I will repeat myself, the metric of cost to trade is absolutely essential for banks to make real tough high-level decisions about which products or even which customers they truly have a return on their bottom line. Moving on, our solution now. We believe we provide the best-in-class solution in terms of a platform and key business processes, which are offered based on a technology service and a business process outsourcing. Each of these solutions we can customize and tailor based on our customers' needs. What are we trying to drive? Our view of efficiency. Our solutions are driving efficiency front to back through their operational processes, through the integration with finance, and a seamless, well-controlled platform capable of holistically really supporting the end-to-end flow of any expense or revenue or commission revenues. We've been supporting some of the largest capital markets organization in the industry. We process over $2 billion in fees and commission annually across our customers. Our solution is utilized by largest banks that I mentioned. Of course, our solution runs through an end-to-end process right from data acquisition, calculations, digitization of fee schedules, digitization of invoices, doing an independent verification of those invoices, raising exceptions, escalations, and managing the disputes. So we basically provide a complete framework and service across the complete life cycle. Now, if you come to our revenue and commission management part of the service, we manage a account receivable across a full suite of processes, right from doing commission calculation, digitization of all the fee schedules related to commissions to clients. We're able to manage generation of the invoices, delivery and publication of those invoices, chasing collections, managing the balance sheet in terms of how do we kind of manage their provision numbers and to collections and reduce that ratio. But also as payments come in, apply the funds to the correct kind of line items, being able to kind of process those through. And that kind of encompasses the complete service that we offer to our customers. You can briefly take a look at this from what we kind of look at overall trade life cycle, right from data acquisition, as I mentioned, calculations to allocations to the whole process, really creating a controlled environment of managing these fees and creating an automated process around this whole for this life cycle. Now coming to our coverage. Now, from asset class coverage standpoint, we have coverage across all asset classes. Our primary focus, a lot of that has been on equities, unlisted derivatives, FX, rates, credits, all the brokerage associated with these trading activities in these asset classes, exchange fees, clearing fees, settlement and custody, regulatory fees associated with that. Again, transaction taxes associated with that. They are all being kind of covered within this platform and our services. We go multi-cat fee category. So now we're looking at overall fee category, overall spend for the enterprise across all these fee categories and get a consolidated view of that cost base and to really drive that efficiency and transparency around that cost base. Coming to our operations, our business operations covers significant amount of change management. That means being able to interpret very complex fee schedules and rate cards, model them and digitize them in a very standard template and format. Be able to perform controls using our static setup. Any changes that happen to the reference shell information or any static changes to your rate cards, whether in the public domain or whether bilateral, we are able to kind of interpret those rate cards, make those changes within a set SLA or a set timeline that we have agreed with our customers. We as a service, we are able to now provide daily T+1 reporting of all that spend base, and then the analysis around the complete analysis around the tiering and the discounts and the volumes and when they are able to reach what their breach, where the criteria, what their breach criteria are. We're able to manage all of that. We very thoroughly investigate any variances and provide a commentary around those. So you get a full transparency of that cost base and to why the variance is and what the opportunity is. Of course, all our services and the platform is driven completely by KPIs and SLAs. And that is all custom based on every custom, like based on our customer requirements. We have a standard set of SLAs which we drive to our customers. We have standard best practices in the industry that we drive to our customers. And that's what our operation change management kind of does. We talked briefly earlier about invoice control, processing and control. Of course, we analyze, assign, correct any charges and classification that goes out of the bills or coming inwards to us. We are able to identify, again, any variable, any change, major changes. We fully digitize all the incoming invoices and really drive an independent verification where bank's internal data is available. And if it is not, we look at effective rates, volume comparison, volume trends, and fee trends to really analyze the way the change in kind of fees and volumes month over month, quarter over quarter, year over year. One of the key to this whole process is around the whole accounting control of having a transparent way of managing allocations, adjustments, and reversals of any of these allocations so that there's a clarity on where that spend is, how the spend is allocated and what drives that spend for a particular business to really deep dive into an ability to kind of measure the profitability of the business at a trader P&L level can be done. There's a periodic review again, right? There's a periodic review of our control and audit processes. We continue to manage, monitor aging balances, aging invoices, gaps in invoices where we expect invoices that have not come in. So there is a significant control process that has been instilled by this operational processing control team. All this drives a significant amount of data at a very granular level, and that enables us to really create that multi-dimensional view of all the data analytics and really understand the spend and the trending around that spend based on a volume adjusted basis to drive the efficiency, to drive client profitability. We basically can drive like savings book of work on back of really identifying opportunities by applying these strategies. And of course, we quantify the opportunity and the key KPIs and measurements associated with these efficiencies, and ensure that that is really reflected within the P&L in the ledger. On the client billing and collection side, on the revenue side of things, I think it's very important to price the trading activity at the prevailing agreements. It's extremely important to ensure the accuracy of billing. You maintaining a contact management framework to ensure that the invoices are distributed and managed and controlled, and a controlled distribution happens of those invoices through this billing cycle, of course. If there are billing inquiries, resolution of those, managing cases and inquiries and disputes around them. And as funds are received, ensuring that the funds are applied to the right period, to the right line items, to the right invoices, to the right trades. And then basically driving any adjustments and relieving of balances, integrating it back into the ledger. So that completes the whole cycle for managing these fees. Moving on, benefits. Of course, our goal is to maximize efficiency through structured negotiations, through demand management, through really driving where the services, how do we optimize the services, and what will enable some of the services to be more cost effective. So achieving the full benefit of your tiered structures, your discounts, your caps, your floors, and you can it enables you really to negotiate much more complex structures for your own benefit. And I think we talked a lot about accounting control and expense processing. Establishing that end-to-end straight through processing is really driving clarity in the ledger back to every transaction or every line item on that spend base, whether it is transactional costs or fixed costs or recurring costs. It can be all managed through this accounting process. We, of course, support complex allocation structures, actually service utilization, allocation based on utilization. So it's very activity driven. It's not necessarily just a static agreement. But that said, we also support static agreement or cost sharing agreements between businesses can be modeled for those allocations. Of course, all this basically drives for an enterprise and allows firms to enrich their data with the information really to drive that decision to those systems and support those strategies at a business unit level and the profitability. We really utilize the rates extract to facilitate, looking at how they can take those rate extracts and push it back to their customers if that's required. Maybe really transforming the overall support and service function into a very controlled, transparent, and efficient environment. At a very detailed business account, region, entity, at any level that you may see. One of the things we have observed always is that firms use several different applications or tools in different fragmented areas of different business lines or different business functions. They're using different tools for addressing some of the same issues. I think we believe that by having a consolidated technology and simplifying that architecture creates a significant technology efficiency within the firm. And that's a technology architecture simplification driven by platform consolidation and process and drive the process efficiency. I think it increases the business agility it creates more flexibility in allowing business to really differentiate their pricing with vendors, with the pricing agreements, without much of additional overhead, right? Or additional technology investment. Firms that are our customer partners do not have to spend a significant amount of change the bank budget every year to keep them up to date. It is driven by the industry, and any industry changes are driven by us. And that's the benefit for the firms that we operate with, our banks that partner with us. Of course, that means taking that whole process over to us. One of the things that we have done is that we've actually created more opportunities for the staff within the banks, rather than looking at the processing part of it, focus more on the controls, focus more on the opportunities and efficiencies. And that's where I think the firms can differentiate, reduce their cost, or remove that cost permanently on an annual cost, permanently from that annual cost, which is recurring every year. Now you don't have that cost coming up any further. So truly, once again, I believe that improved understanding and the measurements really help you optimization of the cost that's been incurred, and creates opportunity, and really offers you an opportunity to drive that efficiency in a very realistic and a considerable way. So thank you very much. I really appreciate it for your time and listening into this. And with that, I would end my conversation. Thank you very much, and I would look forward to further feedback and questions. Thank you.